Testing, testing. Can everyone see me? Right. I didn't notice that I need to refresh this. Okay. Cool. Right. Just give it another 30 seconds for everyone else to stream in. Right. Just make sure everything is fine. My screen, you guys can see my screen. You guys can see me, can hear me. Right. Just to make sure that the audio is working. All right. We're Yeti microphone. Okay, cool. All right. Okay, let's begin today's session. We're going to jump right into it. Yeah, in today's live market analysis, right, we're going to break down some of the key moves that we can expect from the markets, especially across the different the majors. Right. So what should we expect on euro dollar? What should we expect on pound dollar? We're going to take a slightly more technical approach today. Right. We have our analyst, our new analyst joining us. His name is Yongjin. Right. He's very skilled in the art of looking at interpreting the market through the lenses of Wyckoff trading strategy, right? So he'll be taking some time to explain it to you guys, right? And of course, to explain it slowly, as he kind of breaks down each part. If you have questions, I encourage you guys, feel free to ask, feel free to shoot and ask the questions, right? Because it's going to be slightly more technical, right? But it's a very advanced form of looking and interpreting the markets, right? It be slightly more focused on the higher time frames, H1 and H4. But if you want any of the lower time frames, feel free to ask him. Right? Today's session is going to be very, very technical. Right? It's a bank holiday. It's not much fundamental news going around. So it's going to be a very, very technical session, right? But of course, with these kind of technical analysis sessions, right, it's all the more, you can find many kind of trading opportunities. Okay, so without further ado, I'm going to pass the time on to Yongjin just in a minute, right? I just realized that there's a disclaimer slide I need to cover for you guys, right? Just remember, guys, that everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. Please do your own due diligence before you guys trade. Okay, now, without further ado, once again, I'm going to pass the time on to Yongjin, right? He'll be taking you through all the charts that he has prepared, whether it's the majors, whether it's the commodities. If you have requests, remember, feel free to send them through, right? We literally have another screen open here monitoring the requests, right? Otherwise, without further ado, right, Yongjin, please take over.
Hi guys, my name is Yongjin and I'm the new analyst for the team. So today, I'll be going through some forex pairs that you guys might want to see. So give me a moment. Okay, so this is my team. My team, we first have Desmond Leong, who is my boss. He's the chief trader of the team. Next, we have Cassandra, who is the prop trader. Then here is our fundamental analysis. Jin Tao Tai. He has a lot of experience in trading the markets, especially in the fundamental sides. So we actually go to him to discuss fundamentals and we combine it with our technicals before we hit the market. And here we have Jia Ning. Jia Ning is our investment analyst and she also helps with our charting and technical analysis. For me, my photo is not uploaded yet, so I do apologize for that. Well, okay, and we are also the finalists for the best forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. Okay, let's move on to the charts. Give me a moment, I will set it up. Okay, guys. Okay, I will clear my chart first. Give me a moment. Okay, let's go down to the daily first to get a. Okay, so what I like to do first is I like to see where is the market direction going. So as we can see, it's a very, very bearish market. So I'll draw a fib channel first. Oh, sorry. Okay, never mind. Okay, so this is just very, very basic. How I usually start when I look at any pairs. I find the direction on the overall time frame first. So this is the daily. Let me look at the monthly first. Okay, monthly we see it's very, very bearish. Weekly. Okay. So once we have our buyers, we are going down to a smaller time frame. So from daily, what I like to do is first I mark out the monthly highs first. Okay, sorry if I'm moving too fast. Okay. So you go down to horizontal ray. First, horizontal ray. I'll mark out the previous week high and the previous week low. Okay. And I'll label it out so it'll be easier for you to see. Weekly high, weekly low. So normally when the price touches the weekly high or the weekly low, it normally acts as a form of resistance or a support. Price usually reacts quite strongly through there. As you can see, let me get the brush. Price touched the weekly low and it bounced up. Okay, so let's go down to the weekly now. Okay, we'll mark out the weekly high and the weekly low. Oh, sorry. I typed it wrongly. Monthly high. I do apologize for that. Monthly low. Okay. Weekly high. Weekly low. So what I like to do is I also change the colors I like to change the line colors. So instead, for important lines, especially the monthly high, I like to use a red line with the red text. So when it goes near, you know, oh, color red is very important. It's something to look out for. Okay, I'll do it the same for the monthly row. Okay, for weekly high, we can use this color. It's fine. Next, we go down to the daily. So what I like to do now is I like to find a daily bias. Where is price heading to for the day? If you get your daily bias wrong, you are usually wrong for the entire day. Let's say you want to buy Euro USD, but then the daily bias, it's bearish. So you buy, but then you always hit your stop loss. So the daily bias is the first thing I check in the markets before I enter or look for any trades. So as we can see, okay, let's take a look. Okay, daily high. I'll mark it out again, daily high. I usually mark until the daily high. The daily high, let me set it purple. Daily high. Same color, purple. Daily low. Bottom right. Okay, so how do I get the daily bias for the day? Normally I will take a look. I will see, hey, prices came back down. Any of you guys do smart money concepts? So okay, let me explain what is smart money concepts. For this, you see the wicks WICKS. They are of equal lows. So for smart money concept traders, they'll see this as a liquidity zone. So I will mark this with a money sign, bottom, center. So you can see it's very clean. Price has came down yesterday. Price came down. Oh, sorry. We draw an arrow. Price came down, create the liquidity zone before it headed back up. So for today, it's possible that for personally, my daily bias is probably looking towards the upside, or it can go both ways. For this is, well, okay. So normally before I enter any trade, I use something called Wyckoff. So Wyckoff is from accumulation. We accumulate, price accumulates from the bottom, heads up, and it distributes. This is called, let me type it out. Let me turn it big. The Wyckoff price cycle. You can see it happens on many time frames. This is the 4 hours. We have an accumulation here. Price goes up, which is the markup. Let me write it down. Markup. And this is the markdown phase. Markdown phase, where price hits lower. So normally you would like to know how do you know how how low it will go. So I will usually use the Fibonacci retracement. I'll draw it from the bottom, go to the upside, and I normally look for the 61.8%. As you can see, price is hovering around the 61.8%. It's possible it might reaccumulate to head higher, or it might redistribute to head lower to clear the weekly lows, because there's some kind of liquidity area in smart money concepts. Okay, let me delete some stuff here. Remove. Okay. Let me delete. Okay. So now I will introduce to you how I actually use Wyckoff to enter the markets. I'll give a very recent example with liquidity. Okay, let me go to an hour. Okay, maybe I'll start with a higher time frame first, because the smaller time frame is a bit complicated and advanced. Let me take a look. Let me find a clear example for you guys. I'm looking at the hourly chart. If it's not clear, if nothing is clear, I'll go down to a lower time frame, because normally I do day trading. I close my trades before the end of the day, or I do not open any at all. I do not do any swing trading. Give me a moment. Okay, let's zoom in on this area. I will go down to the 30 minutes first. Okay, 15 minutes. It's probably clearer. Okay, so this is the Wyckoff schematic for accumulation. I'll show you how I enter normally for accumulation. Okay, so let's start first. This is the preliminary supply. I'll start writing that out first. Preliminary supply. Price goes down a bit, hits back up, go down, and we have what we call the selling climax. Selling climax. After the selling climax, there will be a very huge reaction. It will be larger than the preliminary supply. Sorry, I spelled it wrong. So from preliminary supply to selling climax, and then we have a very big reaction. It heads up to the upside, and we call it the automatic reaction. What I'm teaching you today is what you can find on Google, but how to implement it is it's a whole other thing. Okay, give me a moment. After the automatic reaction, I would normally draw a secondary test. Secondary test is normally at a 50% mark of the chart. So to get that, you can continue to use the Fibonacci. So I'll draw the Fib, draw it up, and it's around the 50. Okay, let me template 50%. It's normally around the 50% area where price taps into it. So when it goes back down, I'll find the secondary test B in phase B and spring. So I'm basically just following the schematics for accumulation. Secondary test B in phase B, I'll bracket phase B And I'll have the accumulation too. Okay, I can't really see closely, so let me zoom in on the 5 minutes, because normally after secondary tests, we will have something called a spring. Okay, I'll go down to the 5 minutes to have a clearer picture of the Wyckoff accumulation schematic. So at least you guys can see where is STB, secondary test B. Okay, it's around here. Secondary test B, spring. I'll jump back right up to 15 minutes. Okay, for this area, I'll take it as the test. For Wyckoff, there will be tests. What I'm teaching you guys, you normally cannot find on Google Images. The schematic is not that right for how I would enter it. So for tests, after the test, price hits up, the markup, after markup, we will come back down for the last points of supply. That will be my entry. Last points of supply. But what you're looking at is a very large time frame, 15 minutes Wyckoff. So your stop loss will be my entry. Let me take a look. 30 minutes. It's not clear. I'll delete this line. Sorry. Delete this line. Delete this line. I would normally search for imbalance in the market. Imbalance. What do you mean by imbalance? Let me draw it out. Using a rectangle. Look, this candle shot right up. It didn't come back down. This area is empty. This is a market imbalance. But what you want to do is you look for imbalance at the lower area. I normally do not take this imbalance. I'll go lower. Okay. So here is the imbalance. I'll look it. It's over here. Over here. Here is the market imbalance. I will type it out. So for the new viewers who are joining us, it's easier for them to understand. Market imbalance. Insight, center. Okay, market imbalance. What time frame is this? It's on the 30 minutes. Market imbalance on 30 minutes. Let me change all my text so you guys can see on a larger time frame. Visibility. Oh, okay. I'll change back to 30 minutes. Chromatic reaction. So what do we call it? How do we check? Oh, I'm sorry. Okay, how do we check when the last point of supply is happening? Normally, what we want to do is we'll look for a break of structure of the automatic reaction. Where's the brush? Price hits up, markup, it comes back down. So we are entering at the market imbalance. So what do we call this area when it has broken the automatic reaction? Any answers? Okay, if not, I will continue. It's actually, we'll call it the sign of strength. Sign of strength, or we can short form call it SOS. I know there's another meaning to SOS. You need help, you call SOS. But for this in Wyckoff, we call it the sign of strength. We can also call this line, let me clear this. This area, the break of structure. You can add a text in, I'll write it down. Break of structure. Okay. So right now with the market imbalance on the 30 minutes, we can actually enter right here. We will have our entry here on the market imbalance, as you can see. Okay, let me draw. It tapped right into it perfectly before it all the way, it marked up all the way up, as you can see. Okay. So let's see our risk to reward. What you want to do normally on the larger time frame, it's fine to just have your entry here on the market imbalance. Stop loss below the test to be safe, because the test is usually a protected low. The test, your stop loss will be underneath here, a protected low. And then you head up, all the way up. We could have around 1 to 4, 1 to 3, 1 to 3 RR, risk to reward. It's actually, when you master Wyckoff, you just got to remember, you got to trust and know where you are in the market. And you got to trust your Wyckoff analysis before you enter. So normally after I enter right here, if I enter right here, I will normally break even my trade once price has broken through. I'll set my break even maybe underneath here. Break even, I'll BE here. Okay, so once you can screenshot it down, I will do it like that. Okay, guys, okay, give you a nice screenshot. Can take a screenshot of this entire charts. I'll give you guys a while to do it. Give me a moment. Okay, once you guys have screenshotted it down, I will continue. Okay, so for automatic reaction, you can type it as, in short form, AR. Preliminary supply, you can type it as PS in short form. But for now, since you guys are probably new to how I actually view the market, you can write it down in the short form. Selling climax, you can write it as SC. If there are any questions, just feel free to message in the chat. I'm looking live, so I will just answer you guys. Okay, for secondary test, you can write it as ST. For secondary test phase B, instead of writing the full thing, I know it's actually very long-winded. You can just write it as ST bracket B or just STB. It will do. For spring, we'll leave it as that. There's nothing to short form it. You cannot put S, so you don't know what is it. Test is fine. Last point of supply. Sign of strength, as just now I already said, SOS. Last point of supply, you can name it as LPS. Just remember, the market always has to come down to clear the imbalance. But you guys are probably thinking, oh, Yongjing, there's an imbalance right here. No, there isn't. Look carefully. Let me take a look. You see? Let me draw it out. Price came down. You see, the wick cleared the imbalance. This was an imbalance before. This area was an imbalance. But right now, the chart came down, cleared it. So this imbalance is invalidated. I'll continue looking up. So this is why. No candles have previously tapped into this area. See? This specific area. I'll use a brush to draw. Brush. Okay. This specific area. Nothing has tapped in before. Nothing. That's why we have the market imbalance here. To draw it cleaner, you guys can use the control key. Control key on your keyboard, or you can use the magnet tool. The magnet tool is simply, it will automatically stick onto the wick or the body of the candle. See? Nicely. Makes you have a very, very nice, precise entry. So normally what you want to see, how do I get the entry on this precisely? You can just double click it, go to coordinates, and it is the top bar. This is the top, and this is the bottom of the rectangle. Okay. So give you guys more time to screenshot this. You can keep it. You cannot find this on Google. Just to let you know, it's a very, very nice Wyckoff schematic. on accumulation. I'll write it out big. Wyckoff accumulation schematic. I'll give you guys some time to actually digest this. If you have any questions, just feel free to ask me. Wyckoff is something a bit complicated to actually start off. So what I actually did from the start is I actually took a pen and paper. I actually wrote out and memorized every single portion of the accumulation. I will do distribution soon, don't worry. It's fine. So accumulation, preliminary, oh my bad. I spelled it wrong. Okay. I'll normally write it on a piece of paper and I'll memorize it. I remember the very first time I heard about Wyckoff. I'm thinking, what is this? How do you read the market just by writing text? Then over time, you can do back testing. You can do back testing by yourself. Look back at the charts where the charts actually flew, the market went up. You can try to follow this schematic, or you can search Google and read up about Richard D. Wyckoff. I'll let everyone know. Richard D. Wyckoff. He was a stock trader. So basically Wyckoff was actually from this guy called Richard D. Wyckoff. He has passed away nearly 100 years ago. And he started in the stock market around 10 or 15 years old. And he was very interested in it. He was one of the most successful stock traders of all time. He has something called tape reading. You can go and read it up. And he used to actually draw his charts on a piece of paper. And right now we have it actually very simple. We could actually, on our trading, on our MetaTrader, we can actually copy and paste after we can enter our trades. It's that simple nowadays just to trade Forex. But back in the days for his stock trading, for him, he had to call his broker and the broker had to slowly manually key in his orders. So it took around, in his book, I read his book. His book actually said it took him about 3 minutes. 3 minutes to actually enter, to get his order filled. Okay, let's move on. Wyckoff accumulation schematic. Make sure you guys screenshot first before I move on, okay? Give you guys another 10 seconds. Okay. 5 more seconds and I will move on. Okay, let's move on to distribution. Okay, distribution. I'll find a very clean and a basic distribution schematic that you guys can screenshot and learn from. And again, you cannot find this on Google. I actually took some time to actually learn about this. Took me more than a year. Normally, you'll see others charging on YouTube, all this just for mentorships on Wyckoff, smart money concepts. But here I am. I'll give it to you guys for free. Okay. Let me find one, which is on the 30 minutes. 30 minutes. I'll find something clean. Something that is clean and basic. Give me a moment. There are just in case you guys want to know, there are actually many different types of schematics for Wyckoff. There is a distribution schematic type 4, but today, for now, I will show you the simple one first, the most basic one. Okay. We can probably look at this. See, this is an entire markup, price marked up, and it marked down. But how do we want to find the Wyckoff schematic for a nice entry on this area? Let's do it. Let's start. Same thing. I'll zoom in first. Give me my bad. Okay. So for Wyckoff, we will start with the buying climax. In a moment. Okay. So what we have here first is the preliminary supply, PS. And then we have the buying climax. Just now in accumulation, I said it was selling climax. Selling climax is downwards. So for buying climax, for distribution, we are going upwards. So that's the buying peak. So I'll type it out. Buying climax. And then next, we have the automatic reaction. In a moment. Okay. Just remember, any questions, feel free to ask me. Although you guys are here to learn, so I hope to be able to transfer some of my knowledge to you guys. Automatic reaction. So normally we have the upthrust and upthrust after distribution. Upthrust. We normally have that. So for accumulation, we have the secondary test B and then the spring. But instead of right now writing spring, for upthrust, so upthrust basically replaces the secondary test B, STB replaces it. So after the upthrust, we have the UTET. Upthrust after distribution. So not yet, you may be thinking, oh, Yongjin, where to enter? The price spiked up, spiked down. I don't know yet. Okay, chill, relax. Here. So next, I'll find the break of structure as usual. Same as accumulation. Always wait for the break of structure before you enter anything. Do not be FOMO. Do not FOMO. Fear of missing out. Do not do that. If you do that, you will always lose trades. You will just lose trades. You will be entering. Oh, the price spiked up. I must faster sell. No. It's for Wyckoff, it's fine. I normally just wait for the schematic, and if it plays out, it plays out. If it doesn't, it doesn't. It's fine. Okay. Do not do that. Fear of missing out. Okay. Let's continue. So for break of structure, where is the break of structure? Is it after the upthrust, after distribution, or the automatic reaction? You can type your answers in the chat. I'll give you guys some time. Automatic reaction or breaking? Is it breaking here after automatic reaction, after the upthrust, after distribution, or automatic reaction? Yes, you're right. It is after the automatic reaction. Automatic reaction. I'll write it out. Break of structure. I'll type it out in full. Because today it's a learning day, it's not a short form day, it's not writing short forms. Some of you guys do not actually understand. Okay, let's continue. Break of structure. Put it in below to be cleaner. Break of structure at the bottom. After break of structure, we want to know, we can roughly gauge how high the test will go. Same thing, do find the market imbalance. Imbalance in the market. Okay. We have actually two imbalance here, but we do watch out. I'll draw it out. Let me check. Oh my bad. Oh, I'm sorry. It's my chart. Oh my god. Where's my charts? I do apologize. Where? Okay, we are back. Okay. So the market imbalance you want to find, as just now I've explained, it is the area where the other candles have not tapped yet, to put into simpler terms. Here. You can see there's market imbalance here. Market imbalance here. But then there's so many market imbalance. Which one? There's so many of them. Which one do you want to look out for? Normally, what I'll look out for is the last area. Let me draw out. Last area before it caused the break of structure. So normally, for me personally, I'll actually mark out the imbalance only in this area. So I'll take this to be the market imbalance. I'll be looking out for this area for the test to go. But wait, you want to say, do you mean, Yongjin, do you enter here? No. You got, just remember, after test always got a last point of supply. So I'll be waiting for that. The entry is not yet. Okay, so let me clear this out. So we have a clean chart for you guys to screenshot later. Okay, this is the, I'll type it out for those who have joined us, who have just joined us. Market imbalance, 30 minutes. You can see price nicely tapped into this area and went down even further. So let's mark out this area first before we continue. Call this the test. Another break of structure. And here is our entry now. Break of structure. So let's do a bar replay. Let's do a bar replay. So I can draw it out as the price reacts. Replay. Let's go. Let's start. We are back testing now. So we are looking back at old data for those who have just joined us. Prices went down. Okay, I think we went back way too far. Oh my God. I'm so sorry. Okay. Okay, let's go back here. We play. I'll set the speed to slower. Update 1 every 1 second. Okay. As you can see, price broke structure. Okay. Let's stop here. Okay. What we are looking for again is the market imbalance. So as I was mentioning just now, I usually look at the last area that has broken structure, has caused the structure to be broken, and I'll always enter there. I'll not be looking for imbalance further up as, okay. Yeah, so this is the area that caused the break of structure. Okay, so let me find the market imbalance now. Give me a moment. I'll get a rectangle. Okay, so you draw from here to here. You guys know why? Market imbalance. I'll type it out. Market imbalance, 30 minutes. So for a very nice and safe entry, I'll enter right here, short. I'll short it when the market comes back up. Stop loss above the test. And I'll aim usually for the bottom all the way down. Lows, let's just see where the price goes. 1, 2, 3, risk to reward. Let's see. Market imbalance on the 30 minutes. I'll start the replay. Price tapped in. Let's go further. Price hit down. At this junction, I would have already broken even. So if price goes back up to my entry, it's fine. I just break even, and just remember that you have your commission. So always break even and pay for the commission. Else, if you put at your entry price, although you have broken even, but your account still has a negative under profits because you didn't take into account for the commission. So let's continue. Let's check whether this, okay. Okay, my take profit has hit. Why in question again? Why am I aiming my take profit here? Why? Because as mentioned, there is market imbalance right here. I'm just looking here right here. Market imbalance on the 30 minutes. Market imbalance 30 minutes chart. See, price nicely cleared. Oh yes, I forgot to say that this area is the last point of supply. I always do enter on the last point of supply only. You must have that kind of self-discipline to be able to not have a fear of missing out, and then you slowly enter. So that's actually part of your trading psychology. You must have a strong trading psychology not to have a fear of missing out. But I just follow the Wyckoff schematic, so it's fine for me. At the start, I didn't have a proper psychology in trading. I actually did revenge trading. After a trade I lost, I'll continue to non-stop, trade. I'm sure you guys, beginners, have probably done that or went through that. It's fine. It's all part of the trading process. Okay. Price has nicely cleared. Okay. So what you can do, okay, I'll give some personal advice on how to train your psychology. So for psychology, for me personally, I'm actually a avid cyclist. I like to cycle. So last time when I have a losing trade, I will just immediately shut down my chart and go for a cycle. I'll go cycling and think about why did I lose the trade. But everything, obviously, we cannot blame anyone but ourselves. So we got to think properly. Why did I lose out on the trade? Was I greedy? Was my stop loss too tight? Did I miss out on something? I'll think about it, cycle finish, come back home, bathe, have my dinner or something before I turn back on the chart, but not to trade. It's to record a journal. So you will screenshot and you will explain why you have gone wrong. So a website that I like to use is called Notion, where I personally use it for journaling. Notion. Let me get the website. Notion. Okay, guys, record this down. Maybe you guys can use this website as for journaling. Also, to even record a journal. Let me type it down. For journaling. Recommended website. Oh yeah, just to say also, I have no part or do I have any collaboration with Notion. I just personally use it, and as I felt, it's actually very helpful. And it's free. First of all, it's free. So just go ahead, sign up and use it. It's drag and drop, so you do not have to code or anything. It's actually very clean. Instead of writing on Google Sheets, I used to actually do my journaling on Google Sheets, but it's actually very messy. So you can't really, you will type your number in, and then you will just see columns and columns of numbers. But at least on Notion, I will have my screenshots and I'll have an explanation on why I lost the trade or why I took profit. So I look back at the end of the week. I'll reflect back on the Saturday and Sundays. Journaling is very important. It also takes discipline to do a consistent journal. If you do not have a journal, you rely on your memory. But how far can your memory take you back? Can you remember the trades you took the previous week? And then you can remember why did you go wrong? Or even a month ago. So for journaling, it's just good to look back on. It's even better if 1 year later you look back at your journal and then you notice, I've improved so much from losing trades and I learned from it, and I didn't do it again. Once bitten, twice shy. Do not ever do the same mistake that you have done previously. Do not be greedy. For Wyckoff, always put your stop loss above the test. Don't say, oh, I think that the price won't come back up here. Don't think. You are just mitigating your risk. Mitigate your risk. You probably it won't hit your stop loss, and you can take a nice 1 to 2 profits. Do not go all the way down and be, oh, I want to do an Instagram style 1 to 10 or 1 to 5 trade. No. Either mitigate your risk or you lose out on your trade. So we have a nice trade. So okay, let me give you guys a time to screenshot first and digest it. Okay, I'll zoom in. Zoom in. Uptrust. Screenshot this first before I go on to the short forms for distribution. I'll give you guys 10 seconds to screenshot first, so you guys can have a proper angle. Okay. 5 more seconds before I continue. Just remember, any questions, just let me know. I will gladly reply you. Okay, let's continue. For preliminary supply, put it as short form. SY, preliminary supply, buying climax, we'll call it BC, buying climax. Automatic reaction, we'll call it AR. Uptrust, we will just have it simply as UT. Uptrust after distribution is just U hat. Test is test, last point of supply. I said it in accumulation, it's LPS. Okay. A moment. Okay, let's continue. Test. You guys screenshot this first before I continue. Okay. Give you guys 10 seconds to screenshot. Okay. Let's hit on. Okay. Okay, so simply put, we normally have the PSY first for distribution. I'll type it out at the side. PSY, BC, buying climax. Automatic reaction. Uptrust. And uptrust after distribution, UTED. Before we have the test, and then the LPS, last point of supply. You can choose to call this break of structure, or actually you can call this something which I actually don't personally use, but you can actually call it a sign of weakness, which is also known as SOW. Sign of weakness. Okay, so let me draw the arrow. An arrow. Okay, I want a connecting arrow. So sorry. Where is it? Give me a moment. Okay, it's fine, it's fine. So sorry, I will just use the brush. So you go preliminary supply, go down, sorry. Preliminary supply, buying climax, automatic reaction, uptrust. It normally goes down a bit. Uptrust after distribution. Break it down, sign of weakness, test, goes down, break of structure, LPS, and then it goes all the way. And then this area is up to you when you want to take profit. Normally, personally, I will use smart money concepts to find a liquidity zone, and my take profit will be there. Just remember, always take your trades when if the probability is high in your favor and minimum 1-to-1 risk to reward. do not go to a negative risk to reward. So normally I'll risk just 1% on my account. So you can see automatic reaction, breakout structure, sign of, okay, I'll type it up. Sign of weakness, SOW, the sign of weakness, another breakout structure, and then you have your entry. You find the market imbalance first. Market imbalance, give me a moment. My rectangle, you probably find your market imbalance, and then your entry, stop loss above the test. Just screenshot this down. Please screenshot this down. Save. Okay, I'll save it. Okay, once you guys have screenshot it down, I'll just go back down. There are actually many you can search up on. There's the more advanced redistribution schematic, where you can actually draw a Wyckoff schematic somewhere in the middle of a markdown. It's actually quite advanced, so I think you guys better research it out first, or you guys are interested, can slowly search and read up on Richard D. Wyckoff. Okay, let me get out of this replay. Oh my god, the charts. Let me go to the files. Let me go back down to 15 minutes. Okay, same thing for those who have missed out. Before I end my session, you better screenshot this first. Let me draw like how I did it in distribution. So first we have the preliminary supply, selling climax, automatic reaction, secondary tests B, spring, and next we have the tests and the last point of supply. So let me draw it out for you guys to screenshot together with the full meaning, the schematic, and how it would go in my head. This is how I actually see it in my head. So we come down to preliminary supply, selling climax, automatic reaction, secondary test. It usually goes up a bit. Secondary test in the phase B, spring, go up to test. That is where my entry will be. Last point of supply, and it hits all the way up in the markup phase. Same thing. You guys use you guys got to find the market imbalance, find it out, enter, and your stop loss always below the test. Stop loss below the test. The live example is right here. In the market imbalance, stop loss below the test, and the chart just goes. So just to summarize, okay, you guys screenshot first. Okay, just to summarize, Wyckoff is actually nice to use Wyckoff to determine where you are in the market. So you know whether the price is accumulating to go higher or distributing to go lower. So if you are caught up in the distribution phase and then you are buying, you are actually going against the market structure for Wyckoff. So it's actually dangerous to do that. It's best to go along with the market structure. And also remember to mark out your monthly highs, monthly lows, weekly highs, weekly lows, daily highs, and daily lows. I always do it daily. Okay, so screenshot this before I end my session. Thank you very much for joining me today. My name is Chen Yong Tsing, and I'm signing out. Bye, guys. Have a nice day.